Hi, everyone. Welcome back to the final section of our tariff lists seminar. The first section, we talked a lot about the tariffs themselves. In the second section, we talked about contractual considerations, lobbying efforts. And in this final section, we're going to spend some time talking about coping mechanisms, things that you can do to deal with the tariffs. And in particular, steps you can take to minimize potential penalties. I'm John Turley. I'm with the JEDI group, the international trade group here at Foley, and Greg Kusisian, who also worked on the first presentation. He's the chair of our international trade group, will present. And we're also very excited to have Mary Cagle, a former customs auditor, to provide some insight from the other side of the equation, to give some insight on how customs will be looking at some of these various areas. So we're going to get started and just provide a brief overview about the customs compliance regime. A lot of this will summarize some points that we made earlier, but I think that the real key takeaway is that customs compliance is something that you can control. And this is particularly important in a time when there is a lot of uncertainty about the tariffs and how they're going to apply. Everything is coming quickly. But if you're able to get your customs house in order, you're going to be able to react more nimbly to these changes that are happening. So we want to spend some time talking about that. Very, very briefly, go over some of the key points on why customs compliance is really important during this time. And to reiterate some of the points we made at the outset is there are a lot of tariff programs out there. Greg broke them down into the five various buckets, but all of them can have implications for the amount of duties paid. And when you're in this high tariff environment and you have these underpayments, they can be significant and they can compound errors very, very, very quickly, where suddenly you're dealing with real money. In the past, when we had situations where tariffs rates were maybe at 3.5%, and if you made a mistake, it would have been a 3.2% tariff. That's not the case here. Using a simple example, if you misclassify the country of origin of a good that uses Chinese parts and components and claim that it has been substantially transformed when it hasn't, the difference in tariff rate can be in the three digits. So these errors can compound very, very quickly. And when you have those types of errors, you have the high amounts of underpayments. That necessarily means that the penalties can be much higher. On top of that, it can be more challenging to figure out exactly which tariffs are in play. As we discussed, there is generally a stacking of tariffs, with the exception being the reciprocal tariffs and the sectoral tariffs. But these issues, again, can lead to the higher underpayment of potential tariffs and lead to issues. The other point that we wanted to emphasize again is that there are more opportunities for whistleblowers. The CBP, about 3 or 4 years ago, launched a program called the e-allegations program. And under this program, any participant in international trade can submit an allegation that another importer of record is improperly paying tariffs, is trying to evade payment of tariffs. And that program itself leads to CF-28s, which are requests for information from CBP. And it is something that a lot of competitors are using. And in fact, even some nonprofits, if they're concerned about, for example, supply chain integrity issues with forced labor, they have filed these e-allegations. But it is an easy way to bring to customs attention that there could be potential issues. On top of that, the other concern is internal whistleblowers. The head of the civil division of DOJ identified that tariff evasion is an issue that they're going to look at closely, and being able to bring a False Claims Act from an internal whistleblower, for example, adds even further risk. So again, all of this comes down to the importance of making sure that your customs compliance is in order, and it is, again, in times of incredible uncertainty, something that you can actually control. Some of the complicating factors that play into this is that there are some open questions. The new sectoral tariffs, the Section 232, are going to require analysis at the HTS level, making sure that those are being done properly. And again, as I mentioned, there could be situations where there may in fact be overlapping Section 232, and understanding how to deal with those can be important. Other questions, the government has simply just hasn't provided direction. We do expect that the customs will provide information through their cargo messaging service. So we would track that for instructions on how to do it. But some of the open questions are, how exactly for Section 232 is the steel and aluminum content going to be reported? You know, at this point, many companies are relying on reasonable care memos or taking reasonable practical approaches, but nonetheless, the actual formula to be used hasn't really been published. The new rebate programs, the fact that everything is changing almost on a daily basis. Yesterday in Detroit, the Trump administration announced that there is going to be changes to the auto parts tariffs to provide some relief to the auto industry. How that rebate program is going to work in practice is something that is still unknown. And then very importantly, 92% of all entries coming in used to rely on something known as the de minimis exception. And this is for usually low value goods, usually less than $800, that would be able to come in with little, with less scrutiny by customs, less screening. The Trump administration raised concerns that the de minimis exception was being exploited. Companies such as Shein and Temu, in particular in China, were relying on it exclusively. So that loophole has been closed. How customs, however, is going to be able to manage and screen all those additional entries is still an open question. And some procedures have been put in place for the de minimis entries from China, but more globally, it's still a work in process. And finally, there's still uncertainty on how aggressively and what means customs is going to use to crack down on tariff evasion. There are incredible incentives to find creative ways to avoid full payment of tariffs. I would exercise cautions in relying on stuff that you see on the internet. As we mentioned in the first presentation, we've been hearing a lot of noise about unbundling, effectively trying to lower the value of the good and then truing up with the other party through alternative payments, whether it is a retainer agreement, IP right licensing, things like that. Whereas under customs regulations, all payments, all amounts due payable for a product must be incorporated into the dutiable value of the good. So trying these unbundling techniques, simply stated, oftentimes can result in customs fraud. I'm sorry, I skipped past one of my slides. Kind of the last points before I kick it over to Greg. Always important to remember that it is the importer of record that is responsible for ensuring the accuracy and the completeness of all customs entry. It's not the customs broker. Whenever we hear that we don't have a great compliance program in place, but we do rely on a really good customs broker, that means generally that you don't have a customs program at all. It is the company, the importer of record, that's responsible, and compliance should start there. Greg has noted previously that with the transition to entry data on ACE, the Automated Commercial Environment, all import records are now electronic. This provides a very powerful investigative tool for CBP to use. And as Greg noted, they're able to run algorithms and look for anomalies. Did someone change their HTS code? Did someone change their country of origin? Why are most companies using a particular HTS code for a product and your company is not? Those are the types of things that can and will be used by CBP to ensure that there isn't tariff evasion. So as the final equation that we had listened, we're in an environment of heightened risk that creates heightened penalties, and there's a heightened chance for discoveries. And all of this leads to the same conclusion, and that is it is critically important to ensure that your customs compliance program is as strong as possible so that you have the ability to very quickly and effectively identify what tariffs will be applying to your product. So with that, I will turn it over to Greg.
Okay, thank you, John. So the next piece of it, as we said at the beginning of the first webinar, is understanding how the Trump tariffs not only are affecting companies, but what they can do to cope. Now, the uncertainty in this area was underscored just this morning when the federal government released its statistics and found that economic growth actually, for the first time in 3 years, was negative, which was largely attributed to the impact of tariffs in two ways. One, because consumers and businesses in particular were front-loading their purchases. They were getting imported goods into the economy, and because that is money that's spent outside the United States, that is subtracted from the GDP total and subtracts from growth. But secondly, the uncertainty was leading companies to pull back on their spending, leading consumers to pull back on their spending because people are a bit paralyzed. So that underscores that there's a lot of moving parts, and companies need to be taking into account both the supply and the demand side and trying to risk plan it. When we are talking to companies, though, about managing tariff-related uncertainty, we focus that it's very important for people to first understand what their full risk exposure is, to focus on the issues that they can do something about, which includes their customs compliance, their own supply chains, adding flexibility to their supply chains, and to be taking steps to be nimble, basically, because we don't know where the final tariff picture is going to end up, but we do know that it's going to result in substantially higher tariffs, that they're going to last for a substantially meaningful period of time, and that even tariffs that might be tied very closely to President Trump are likely to outlast President Trump, much as the Section 232 and 301 duties that were imposed during the first Trump administration lasted through an entire Democratic administration under President Biden. So taking these items into account, we have a white paper on managing international trade and tariff risk. It lays out actually in the full 12-step program. It's been very popular from companies looking for guidance as to how to manage their the tariff risk. So we thought it'd be a good idea to give a quick overview of that before we turn it over to a former customs auditor to talk about some of the ways that companies need to take steps to cope with the tariff uncertainty while not also opening themselves up to a potential customs audit or Form 28 request for information or even penalties. So the first step is we're always surprised how often companies don't have a full handle on their importing patterns. And we always tell people the place to start is pull the ACE data. I mean, that's the data that customs itself has. It's comprehensive. It covers all imports except for any de minimis imports would probably be the one main exception. So it gives you the full range of like what products you brought in, what countries they're coming from, how you value them, how you're handling things, and gives you good insight. And then you can take that information and you can supplement it with other company information, like information from your procurement team about items they're thinking of making, how they're expanding things, maybe full information on the cost structure that applies to them. But the key is to start with the ACE data that customs itself has and to use that. And it's so easy to pull that information because you can just ask your customs broker. That being said, we do recommend that companies consider setting someone up and having someone get trained up on how to use ACE. If you are a company contact for ACE, then you are getting the communications from customs at the same time as the customs broker. You can get in there and run searches anytime you want, and you can have full access to import-related information, which allows you to do post-entry checks and things like that. Also, it should be known that there are services out there like Peers and Import Genius, which gather up the publicly available information. So it's also possible for you to consider subscribing to information like that if you want information on your competitors. One thing to keep in mind, though, is just like you like nosing around and seeing what your competitors are doing on the import front, they may like to do the same thing for you. So if you do a quick Google search for customs manifest confidentiality, the very first thing that'll come up is instructions on how you can make your import data confidential. It's extremely simple. It basically involves every 2 years submitting an email request to customs saying, here's our importer record number, we want the information left there. You have to renew it every 2 years or it defaults back to everything being public. Not a bad thing to think about while we're thinking about import data is keeping your company's information confidential. Step 2, the risk planning. A lot of this is about adding flexibility to supply chains. Under the reciprocal tariff concept, then the country of origin becomes one of the most important, and often the most important, determinant of what your what your tariff rate is going to be, what your entire tariff schedule is going to be. So having the flexibility is very important because we don't know where the tariffs are going to end up, but we do know there's going to be a wide range of tariffs. Right now, it's going from 10% up to 170%. Supply chain diversification used to mean let's move stuff out of China, but with the hodgepodge of different tariff rates we're going to see, then companies are going to need more flexibility. Often it means setting up alternative and secondary suppliers. And for certain industries, particularly automotive, but others as well, you also may potentially need to deal with qualification issues and concerns because the qualification process can be quite onerous for some industries. In addition to automotive, we also see it for like medical devices and medicines, pharmaceutical products, things like that, where there's just like a long approval process, sometimes even needing a government approval piece of it as well. Step 3 is the one that Kate and Vanessa were talking about earlier in the day, looking for ways to identify your contractual position to deal with changes in the importing environment. So it's important. We see all sorts of clients at Foley who are gathering up all their buy and sell side contracts. They're either doing it themselves or reaching out to us to analyze them, determine basically whether they're clear. It's the advantage of everyone on both sides of a contracting relationship that material terms are clear and who is bearing the risk is known, because it avoids disputes down the road. And tariff and who's responsible for tariffs and how you're going to handle unexpected tariff increases have been shown to be very, very material in the current environment. So look for ways, as Kate and Vanessa were talking about, to figure out where it is, because every time a contract comes up for renewal or you have a new contract, that's an opportunity to reconsider how you're handling the tariff-related risk. And you also can use commercial expansions as a carrot for revising your contract, saying, hey, we're stuck as the importer of record on this, and we understand that this is our obligation, but maybe we can work together. Like maybe we can extend the time period of the contract, or we can expand the number of products that are covered. But in return, we're going to need some kind of sharing of the tariff, because customs allows you to do whatever you want behind the scenes in terms of the tariffs. The only exception is there are special rules regarding the reimbursement of anti-dumping duties. But in general, customs is like the import of record is going to pay us. That's it. But if someone wants to reimburse behind the scenes, or you want to share the tariff, we don't care. We've been paid. You guys can do what you want. So you can use that flexibility to potentially come up with innovative ways to share a tariff-related risk that, frankly, people weren't thinking about so much a year or two ago. Step 4, as John was talking about, risk minimization is so important in this high tariff, high penalty environment. You need to be very cognizant of all the ways that you can run up a quick underpayment penalty. Some of the biggest issues we're seeing by far: country of origin, the use of Chinese parts and components where you're not maybe doing enough in another country to substantially transform it could leave you open. USMCA and free trade agreement compliance is more important than ever, because in addition to determining whether or not you qualify for what is often a zero rate under the Chapter 1 through 97 tariffs, it often can determine whether or not you are getting the benefit of a suspension of current tariff rates. Anti-dumping and countervailing duty order is being certain that you have determined whether or not any of those apply is still as important as ever. It's not something that's tied in with the current Trump administration initiatives, but because those anti-dumping duties can be high, 60, 80, 100% or higher, it's really, really important. And some of them are quite complicated. Like the aluminum extrusions order is notoriously difficult to apply because it doesn't apply to like a class of products. It applies to products that are made by a certain form of manufacture, which is the extrusions of aluminum. And because you can extrude aluminum like molten aluminum toothpaste out of a tube into like whatever shape you want, then you can see all sorts of things. Like it can cover like shutters and door thresholds and storm doors and things like that kind of have nothing to do with each other. Probably should have picked an example that wasn't 3 household products, because they do have something to do with each other. But in general, I mean, it could be like a sunroof for a car or something like that, and it's by the process. And that's just one common order that we come across. So being certain that you're covering them is important as well. Classification is very key, as John was discussing. One thing we haven't talked about is recently, for our 3-part series on increasing Customs False Claims Act risk, we did a review of every Customs False Claims Act case in the last 20 years. And it was surprisingly common to see companies getting into paying substantial penalties for failing to include assists, which are customer-provided production aids. Think of like tools and dies or molds. If you have those items, you need to reflect the value of that assist, because basically that's something the manufacturer would normally provide. But U.S. customers often will provide those things as a quality control measure. And then the value of that assist does not show up on the commercial invoice. Instead, you're just paying for it. So customs requires that to be added. Usually over the useful lifetime of the product, you kind of divide up the value of the assist. So if you are doing those assists and you don't have a system for tracking them and attributing them to particular entries, then you need something like that. Valuation, very, very important. Do not fall prey to claims that you can do things like unbundle the value and strip out like the value of royalties or things like that. Those items either are a mandatory addition to value to get to the entered value, or are considered part of the value of the product, and stripping them out is basically potentially customs fraud. And lastly, post-entry checks. Those are so important. You have that 310-day period where you can make any changes that you need. So take advantage of that. Set those up. Step 5, just like you said, in a high tariff, high penalty environment, that it's very important to have customs compliance in order. The same thing is true for identifying customs savings. If you can potentially put goods into a foreign trade zone, or you can use a customs bonded warehouse to defer tariffs, or if there's strategies you can use, then those are more important than ever. We often saw companies that weren't potentially claiming their duty drawback, for example, because it seemed like a pain to track it, but it can become much more important in a high tariff environment to be using these duty saving opportunities. That being said, with regard to duty drawback in particular, you have to be careful because certain of the tariffs have announcements saying duty drawback will not apply. And duty drawback is the process when a good comes into the United States, maybe you bring in 100 units of the good and 80 of them are distributed in the United States, but you have a distribution warehouse that covers like Latin America and 20 of them go abroad. You can get back 99% of the normal tariffs for that. But it can be a little bit tricky as to seeing whether or not that will apply to the new tariffs. But these is to say that there are scenarios where there's tariff saving opportunities. Number 6, prioritize understanding how the new tariffs impact your imported goods. It's very important to understand the derivative aluminum and steel rules. You need to be certain that you understand which tariff you validly are under. And no, that doesn't mean just grabbing a reasonably not bad HTS subheading because it's covered by the steel tariffs rather than the reciprocal tariffs of 170%. You need to be applying them in a way that's defensible to CBP to show that you're using reasonable care in your import operations. Do follow the CSMS messages as CBP works through the issues. If you just type in customs and CSMS, it will come up. The CSMS are the cargo servicing message something. I don't know what the S is because everyone just calls them CSMS. And they're the way that customs communicates to the importing community. And especially right now when there's so many new issues coming up, customs is running a bit behind, but they are putting out very helpful guidance on issues that are foundational to complying with the new tariffs. Step 7 protects against higher penalties. As I mentioned, these post-entry checks are very important because you have 310 days in which you can file a post-summary correction, which is basically no harm, no foul. You rip up your original 7501 entry summary information and put in a new set. Customs is not looking at this as anything bad. In fact, they encourage it because it encourages accuracy. So take advantage of that. One thing to be certain of, though, is if you get like a Form 28 or a Form 29 or some kind of communication from Customs saying, we think this entry was incorrectly handled, be aware that you're expected to implement that across all of your unliquidated entries. So you're supposed to use the post-summary correction to identify analogous or identical entries and follow it through. Just because Customs criticize entries A and B does not mean that they don't expect you to make the corrections for C, D, E, and F as well. And you also need to consider whether you're going to do a voluntary self-disclosure to clean up entries that are beyond the post-summary correction period. But in general, you should be using these, the post-entry check period for use post-entry checks or customs audits to get that correct as well, particularly in this high tariff environment. Prepare for potential penalty claims by preparing reasonable care memoranda. We are being inundated with requests for these. And the most common request actually is a little bit expanded version of this. Classification definitely is one that we're seeing a lot of. People are asking for comments about derivative product status. USMCA status should be another bullet point. That is very important because being USMCA compliant is often a key to determining what is suspended or not. Another big one that we're seeing is companies that are looking more carefully at their classification and they want to change something because they look at it and say, ugh, we're going to be paying this 170% tariff, but I kind of think that we were misclassifying it incorrectly all along. And if we were to classify it correctly, we'd be under, say, the steel and aluminum, under one of those tariffs. And they asked, is it okay? Can we change this? And I say, yes, absolutely. You should take the most advantageous and the most accurate, classification, just as everything else. But you need to understand you're at a heightened risk of customs coming in and questioning it. So consider putting together like a reasonable care memo where you lay out, here's how we did it before, here's how we're changing it, here's what the product is. We worked through the general rules of interpretation. We found these three, advisory opinions, and it leads to the conclusion that this is the correct way to classify it, notwithstanding how we traditionally did it. Just something like that, and now you have all your rationales put together. They're ready to use if you get like a Form 28 or something, and they show that you were acting reasonably and not precipitously and showing reasonable care, which is important in trying to evade any kind of penalties that you might get if customs were to disagree with you. Step 9, mentioned this already before, protect yourself against penalties by filing prior disclosures. More important than ever, Customs is doing the data mining. If one of the key things you need to pull from the set of webinars is to be certain that you know just how much visibility Customs has into your import operations. This impacts whether or not what you should be doing for customs compliance and understanding that as well. But there's a reason why 5 or 6 years ago, when ACE was new, we were only doing a couple of customs disclosures a year, and now while we have basically at all times at least a dozen going on at the same time for various clients, it's because of this visibility that Customs has. Because before Customs, you'd have to have like someone at the port like thumbing through paperwork and looking at shippers' export declarations and import documentations and manifests and things like that. It was all on paper. It was a bit hard for Customs to have any kind of real insight, and now it's all there electronically. And so it's so important, particularly with these tariff proclamations, which are saying you need to be prioritizing tariff enforcement and not apply any mitigating factors, because those voluntary self-disclosures are the only way to lock in no penalty for those administrative penalties. We're seeing a lot of companies that are surveying their supply chains and being surveyed by other companies, where people are trying to figure out like what's their exposure. Because even though it's the importer of record that is seeing the direct responsibility to pay any tariffs and the accuracy of information that's in there, it doesn't mean that if you are purchasing from an importer that you're free of risk, because you have to worry about big price increases, and you have to worry about the company just saying, hey, we just can't do this business anymore, not at these tariff rates, and walking away. So even if you're not the importer of record, when you're doing your tariff risk planning, consider your vulnerabilities to tariff-related disruption, whether on the pricing or non-delivery sides, so that you understand the potential impact on both your pricing and potentially even shutting down your production if someone doesn't perform. Step 11, all of a sudden, people are very, very interested in tariffs. And this includes people like at the top of the company, people in various areas, procurement, product development, sales, everywhere. People are having to consider this because it's directly impacting so much of the company. So be aware that there's a lot more stakeholders than there used to be, and that it's important for people to understand the impact that these tariffs are having at every level of the company. Step 12, again, switching back to something that Kate and Vanessa were talking about in webinar 2, don't onboard a new problem when dealing with the tariff problem. You need to understand that Customs is the gatekeeper into this country, and the amount of detentions that we're seeing for forced labor, human trafficking, and Uyghur Forced Labor Prevention Act, those detentions have gone up 1,000-fold. They were like 3 million a year or so, like 3 or 4 years ago, and now they're over 3 billion. And this is driven in biggest part by the UFLPA, but also increasing attention by customs on forced labor and human trafficking and issuing withhold release orders and things like that. So it is super important as you're running around trying to get new and secondary suppliers on board to be taking steps to be certain that they are going to be complying with the rules relating to supply chain integrity. Because the US government and other governments, it's not just the US government, but the US government is sending a clear message that companies need to be responsible for their supply chain right down to the last sub-supplier. And if you think about it, there's so many laws that come together. I mean, OFAC is saying don't have like North Korea or Iran in your supply chain. You've got you've got conflict minerals issues where which in effect is supply chain management. You've got the UFLPA, you've got the forced labor and human trafficking, you've got California with supply chain transparency requirements, and other governments like Australia and Germany, Finland, various places that have supply chain integrity. It's all sending a consistent message, which is you need to be doing supply chain mapping, identifying your sub-suppliers, putting in place flow down conditions, and in particularly focus on Chinese parts and components to ensure that they're not being sourced from the Xinjiang region, which triggers basically a presumption that they are the product of forced labor due to the way that the Chinese government is treating basically the Uyghur people in that area. The Congress has made a determination that that will be considered to be a form of forced labor, and customs will detain those goods at the border, even if it just contains parts and components. It's not just the overall, which is why if you look at the Uyghur forced labor UFLPA customs dashboard, the top 5 detention sources does not include China. It includes countries that use Chinese parts and components. With that, I think we've already covered these items.
Hi, everyone. First, I want to thank the Foley team for allowing me to partner with them on this presentation. We've been together this morning for about a little over, a little over 2.5 going on 3 hours. So I applaud you for your endurance for sticking with us. And I also want to, more than that, commend you for taking time out of your day to go over and to review and understand new developments in trade compliance and how they can impact your trade compliance program. As Greg has mentioned, and John, I am a former customs auditor, and if you've ever met me in person or been on a call with me, you know that my #1 reason for leaving is so that I could assist people. So with that said, I want to talk a little bit about it's where we are today, and it's impossible to overstate how much visibility customs has into your import data. Now, for the most part, I am going to talk about ACE, but I know that there is a pilot program that customs is working on to review even additional data that they can review and look at your entry, export, whatever type of information. They can also look at AMS or your automated manifest system, and that is going to allow customs, they can see your data while your shipments are on the water. But in terms of ACE, I really want to talk to you about ACE, Automated Commercial Environment. This is foundational in your trade compliance program. If you do not have ACE, please reach out to the Foley team or to myself and let us help you get that. So ACE is going to allow you to look at so many aspects of your import data. And you're going to be able to see for, your entry lines, what HTS was declared, from what suppliers, are those related parties, was it an anti-dumping or countervailing duty entry? what type of you're really not limited to most of the entry data that you want to see. Now, customs will limit this in terms of part level. You are not able to look at your part numbers within ACE data. That is more of a broker function. However, ACE is an incredible foundational resource for you to look at. And because of that, Customs is constantly using ACE in a way to review your import data. We're already seeing clients who are receiving an increased amount of CF-28s and 29s. Now, a CF-28 is your request for information. Hey, importer A, can you provide me some information, some product information, a product description, maybe some country of origin information, so that I'm able to ensure, as a customs agent or an auditor, that that you're correctly declaring the HTS, right? And so when you respond to customs for that CF-28, you want to make sure that you're responding within the allotted time period that will be on that CF-28, and you want to make sure that that response is solid. I would not leave this up to a customs broker to make this response for you. I see instances where that backfires every day. And if you have, questions or concerns about responding to it, reach out. The Foley Group can help you in any way respond to these or give you some guidance. The CF-29 is going to be your notice of action, basically saying this is not the correct HTS. For example, this is not the correct HTS. This is at this rate of duty, and you'll be receiving a bill for the difference in duty that was declared versus and what additional amounts you owe. Now, I want to say it is not normal to have a large amount of CF-28s or 29s. That is not a normal practice. Some importers I speak to, they find that, oh, we receive X number a year. It's not normal. You are on customs radar. And if you are receiving a CF-29, that is just your notification that customs will be taking action in some way, shape, or form. Okay. And it is better for you, as Greg had mentioned, and I know John has mentioned it. We talk about this on a weekly basis. If you receive a CF-29, I would go ahead and talk to a trade attorney about submitting a prior disclosure. Okay. We are also seeing increases in spot audits and what Customs calls risk analysis and survey assessments, RASAs. It's a customs audit. They don't necessarily look as much at your internal control. So Customs is also bringing all of its enforcement into the picture for these new tariffs. I don't know if anyone has been on USA Jobs, has been on LinkedIn, but the amount of jobs that Customs is posting for new auditors is absolutely insane. Of all of the time that I worked with Customs and left, I have never seen this much of a hiring for auditors. And you also see on LinkedIn, you'll see importer positions for trade compliance, like employees to come and even build a trade compliance program. It's been mentioned during this presentation multiple times that Customs will impose the maximum penalty for the underpayments of these tariffs. And also, these are not simple tariffs. These are complicated. So you need to make sure as an importer that you are understanding your imports, where they're coming from, because we can't claim ignorance on this. We have to be in the know. So for a lot of these reasons and more, I'm going to explain, customs compliance is more essential than ever. So what I want and what I encourage importers to do is to be more proactive, right? In terms of your trade compliance program. So I'll tell you about some common problems that I see even with experienced importers. So, a lot of times right now I am talking to people and their compliance program may not be existent. If it is existent, it could be that side of the vegetable on your dinner plate that you didn't even want to get, but your mother said you needed it, right? So, it's an afterthought. It's something to maybe just slightly appease someone. We cannot operate like that any longer. And so some other things that I see is outsourcing people or reliance on the broker. Let me back up, reliance on the broker. As a customs auditor, sitting with an importer, or in the consultant world, sitting with importers and clients, if they mention to me that they rely on their broker for most, if not all, of the functions of their trade compliance or even their classification, the workload will be plenty. Okay, because that is a red flag to customs. Relying on your brokers for your classification, for your compliance program, that is the red flag. And I also see companies where they outsource every single, not to a broker, but to a third party. I see where they've outsourced their trade compliance to a third party, and they just think, okay, it's being taken care of. It is not, because you are not, by outsourcing it completely, you're missing out on that monitoring function that you as the importer of record are responsible for. Okay, so it's one thing to outsource, but you need to, if you are doing that, you need to have some type of monitoring function in there. And by monitoring, this is where you want to make sure that you're doing those post-entry checks. And you want that post-entry check, post-entry review, to be targeted and focused on your risk. What are your risks? How do we know what your risks are? You need to look at your ACE data. You need to see where your customs risk exposure is. You take that risk exposure and then you create a post-entry audit. And that, even if you are outsourcing the majority, if not all, of your trade compliance, you are able to see the areas that you need to focus on and you need to monitor and you need to understand. I would encourage people, importers, possible future clients or existing clients of Foley, if you've not had a compliance audit, now might be the time to do so. It's a lot. I also see, let me back up really quick on most common problems I see. I experience clients where they have inherited, they've acquired a company and they inherit their poor trade compliance practice. They don't have the time, the resources to go through, so they keep going business as usual. You've got to do due diligence. You've got to make sure, if you're acquiring companies, that you are taking note of what their problems are and that you are able to fix them, and who will be responsible. You also want to make sure, I see people, I've had numerous calls this year about companies who are doing, who have a large amount of USMCA activity, and they've never gone through one qualification to make sure that those free trade claims meet the rules of origin for that specific program. Again, you need strong customs compliance in today's age. Okay, so 7 common factors that we see. I've already talked about the over-reliance on customs brokers. Okay, so you want to make sure that you're auditing the work of your brokers. I would recommend also, again, we talked about post-entry checks, but I would even say, if you do not have an SOP, a standard operating procedure, with your brokers about what they can and cannot do, you need to put that in place. If you have questions, the Foley team or myself are able to provide guidance to you. Number 2, the failure to have a customs manual. While it is not in the regulations, the customs regulations, it is frowned upon by customs to not have one. I've even had an importer, when I was at customs, tell me, you know, he was so fed up with his audit. He said, I'm not creating a manual and just so we can put a bow on our operations for you. Verbatim, that has been said. Don't go online. Don't chat GPT what your customs compliance manual should have. What should be in your customs compliance measure or manual is a direct result of your customs risk exposure. Okay, and there might be a couple other areas that you want to make sure you address just to, okay, appease customs or know that you are aware of certain things, but your customs compliance manual needs to be tailored to where you have risk exposure. And you need to not only define what that risk is, but you need to have procedures on how you manage that risk. Failure to have a classification index. Don't rely on your broker to classify your goods, okay? You want a strong classification index. You want whatever chapters 1 through 97 HTS is. That's also called your most favored nation duty. You want to have that. You want to have any other tariffs that are applicable laid out in that manual. It wouldn't hurt also in this time to have a country of origin. You need a product description, a product code, and you also, more importantly, want an audit trail, okay? The audit trail is going to define why you are going with that HTS, what that decision to go with that HTS is rooted in. It shows you've researched, it shows you've looked into your product, that you understand it, and that you know this is the HTS that you need to be using. Failure to meet USMCA or other FTA requirements, number 4. Okay, country of origin, we've talked about it. Let's take USMCA, for example. Having a Mexico country of origin or a Canada country of origin does not mean that your goods meet the requirements or the rules of origin for USMCA, okay? So with that, you want to make sure that you have gotten and reviewed a bill of materials where you are able. Most of the time you're going to see that from your related parties in Mexico or Canada. You're able to look and make sure that that finished good that you're importing actually meets the rules of origin, which are laid out in the US HTS. Okay, country of origin, on the bill of materials, your product, a description, the country of origin, the classification, and that value of, or the cost of that good are all essential parts of a qualification for free trade, okay? And so you want to make sure that if you have a bill of material, that it includes all of those elements. Not having the computer system to be able to hold that information, it's not an excuse. You have to do it. Don't take the approach of, oh, 75% of the goods come from Mexico, we're good to go. It does not work like that. You have to go by the rules of origin. Failure, number 5, failure to track assist properly. Okay, you need to, if you are provided materials at a free or discounted rate by a supplier, you have to be able, and it's used in production and it's necessary for production, you are going to have to make sure that you're tracking that value of that good. You have to declare it. Don't, I've seen instances where people will purchase a tool or material separately and they're invoiced and they pay the supplier for it, and then it's used in production, but it's not accounted for in the cost of a good. That is not okay. You need to be able to track your assist and items such as that. And if you don't want to track it, the easiest way to do it, I mean, obviously you're going to have a record for it, but you can claim the full value of that assist on the first shipment that it's imported, and that way you know it's taken care of. Failure to implement transfer pricing requirements. You cannot use an IRS transfer pricing study. It does not work that way, okay? It's great that you have it, but just in the same way that you on a yearly basis get a transfer pricing study for your IRS, for the IRS, you need to do the same for your customs and for your imports with related suppliers. That is essential. And then also failure to maintain required customs records. I can't say it enough, record keeping is essential. You have to maintain and you have to keep your entry documents. You will get a record keeping violations. You cannot say, oh, that's such and such. That's this person's responsibility. That is not okay. You also need to make sure that in your in maintaining these records that you're able to tie invoices to customs entry numbers. That is also very important. 7 deadly import sins. Okay, so some of the most common errors that we see is, again, I've talked about this and I'm going a little fast because I'm very limited on time, but we're letting our broker take care of it, or you know, a freight forwarder take care of it. You really can't do that. I know that if I'm told that, the workload or the discrepancies that are found in an audit will be aplenty. Okay, and some of the other point here is that the most common errors are the ones that are going to show up on the 7501. Errors that are detected on a 7501, that is low-hanging fruit. Okay, you do not want to make deductions from the value that you cannot support or are not allowed. Okay, you don't want to do that. You don't want to, I see this a lot, you don't want to make claims for an FTA when you don't even import from that country. You don't want to make claims for civil aircraft when you're an automotive company. That is low-hanging fruit for customs, okay? And there's so much more, but all of this is so easily caught by a post-entry audit, okay? Or even a compliance audit to catch that. So when we talk about, number one here, with the 7 deadly import sins, we see that, and I've just spoken about it, you want to have your records. You want to be able to provide your 7501 and all the supporting information. That is your commercial invoice, your packing list, your bill of lading, anything you use to classify that good. Any deductions you're taking from value, that needs to be in there. You can even provide the ruling for why you classified something a certain way. You might want to have supporting documentation in today's climate to support the amount of steel or aluminum that are in the good. Otherwise, you're going to be claiming that full value of that good and subject to the steel and aluminum tariffs. It is so important to be able to have all of your backup information in one place. Okay, don't rely on multiple people to have multiple pieces of your import documentation. You need to have that. You need to know where it is housed. Number 2, failure to recognize applicable AD/CVD orders. You want to make sure that if you have AD/CVD, the countries you're importing from, that your goods are classified, it all falls into your anti-dumping. Failure to properly determine the country of origin. Again, it's been discussed, and it goes back to where the substantial transformation happened. I've already spoken about how important it is to classify your goods correctly, and the failure to declare your entered value based on Incoterms, your terms of sale, also any transfer pricing adjustments, anything like that for your related party transactions. Failure to include, number 6, your off-invoice items such as assist or royalties. We've discussed that. You need to make sure that the full value of your good is included on that entry summary and in that declaration to customs. Lastly, failure to follow USMCA or any FTA requirements. That is essential. All right, so again, your country of origin is a greatest determinant in your amount of your tariff, okay? So you cannot produce something in China, ship it to Malaysia, and expect to be eliminated from any Section 301 duties. That does not work. That is illegal, and that's called illegal transshipment. You want to make sure that your third party, that you know about your third party Chinese parts, if any goods are coming from China. You need to go down that supply chain, and you need to know where your goods are coming from, where your suppliers are getting their goods from. Again, we've talked about misclassifications, and we want to talk about false claims of USMCA compliant. Do your qualifications, do the solicitations, and know whether or not your goods qualify, because it will be found otherwise. Again, we talk about the mandatory additions to the entered value. Greg hit on number 6 earlier, incorrect offboarding of entered value. Don't take out your royalties. Your royalties are essential. You cannot take those out if they're dutiable. You can't take out the cost of a material or tool, die, mold. You can't just take that out. And also, I want to say, lastly on this, for first sale, you want to make sure that you know about first sale, if you're using it, what it is. If you have a bona fide sale, there need to be 2 bona fide sales. Are the goods clearly destined for the United States? And are the goods and the transactions made at arm's length? You want to focus on your duty saving opportunities. Just by doing a risk assessment and a compliance audit doesn't just identify the discrepancies, it's going to identify ways that you are able to capitalize on some duty savings. I see Greg appearing right now because I know we're short on time.
So I think we can all agree that we need more movies involving customs agents. Apparently the 50s and the 60s were the time frame when these movies were in vogue. I haven't seen one in the last 30 years. So we've already talked actually about the tariff saving opportunities, so we're not going to cover that again. But did you want to get to the takeaways? As Mary was discussing, there's so many ways in the new tariff environment that you can get things wrong. You can leave yourself open for False Claims Act cases. Your competitors can put you in. Plaintiff law firms can fine you. Customs has unprecedented information. And thank you, Mary, for depressing me even more by noting that they even have more areas other than ACE where they can use to track down information. So if you take anything away from this, it is that you really need to be focusing on your customs compliance and getting things set up properly and have your post-entry procedures and just be doing everything. Customs is very lenient in the sense that it gives you multiple opportunities to get things right, but they still are a collections agency, just like the IRS. And just like you have to get your IRS, your submissions correct, and you have to do things correctly there, Customs is no different. They are a major source of revenue for the U.S. government, and you have to follow their rules. And it's particularly true in the new environment. So do look into having a customs manual that's tailored to your operations and the way you import. Look at ways to have a classification index, system for a tracking assist. For goodness sakes, make certain that you are having USMCA compliance in place. Something as simple as not having your certificate of origin in place at the time of entry can negate your ability to claim preferential treatment under the USMCA. So really, please take all steps to do something about this. Do feel free to reach out to us. Our emails and contact information are on here.